Hello guys, my name is Mtawashim Baiwa. I'm a lecturer in the Management Accounting and Finance Department at Chartered Accountants Academy, and today I'm going to be taking you through inventory costing. So I understand from your prior studies you've covered inventory costing from your A-level studies, from your undergrad studies. If we are now covering it as a revision for inventory costing. So let's start. Our learning objectives are, by the end of this lecture, you should be able to discuss the methods of inventory costing. Before I can move on, this lecture is covered in two parts. So this one is my first part for inventory costing, and there's going to be an additional part which covers inventory costing part 2. Let me repeat. Inventory costing is in two parts. So I'm going to cover part 1 now, and we are going to cover part 2 later. So for this part 1, we are going to discuss the methods of inventory costing, and if time allows, we are going to discuss the techniques of costing. So now let's think. There are two major objectives of cost accumulation. Why would you want to accumulate costs? If you go back to our previous studies, when we covered cost classification, we identified that we might need to accumulate costs or to estimate costs. Why? Because we want to budget, which is for planning purposes. So we need to accumulate costs to identify costs for responsibility centers, for planning and control purposes, and to identify costs of products for inventory valuation and income determination purposes. So inventory means we are holding inventory that we sell, expecting to get a revenue. So with this in mind, now let's discuss methods of costing. What do we mean when we say methods of costing? By methods of costing, we mean the procedures adopted to ascertain costs. So the method you adopt depends on the circumstances in which the accounting is required to be made, which is dependent on the product being manufactured and the nature of the industry. So what determines your method? It's your circumstances of the accounting method, the product, and the industry in which you are making in which you are manufacturing your product. So depending on the nature of the business, that is the type of the product made, and the procedure or the process adopted to make it, different costing methods come about, such as specific order costing. So for a specific order costing, it's a costing method applicable to those industries where the activity being accomplished consists of a set of tasks which are specifically identifiable at each stage of production. Let's have an example of job costing. If you can be able to identify each cost, each task at each stage of production, it's a job cost. Let's think of an example. Where can we normally get these job costing jobs? So, for example, if I am a builder, I build houses, I build mansions. For each and every stage of completion, I can be able to specifically identify the task. So, for example, I'm at a roofing level. So I am at the slab stable, that's job 1. I'm at the window level, job 2. I'm at the roof level, which is job 3. I'm at the plastering level, job 4. And I'm in the scheming and painting, job 5. Which means for me to build a house, I can have a series of 6 jobs which carry different costs in each job, which I add in total to give to my which adds in total to the cost of the building. Happy? Now let's move on to operation costing. So when it comes to operation costing, it is a costing method to those industries which activity consists of continuous or repetitive operations or processes, and the products are identical and cannot be segregated, which means they cannot be separated by segregation. So products are identical. Let's think of a process, shall we? So when you are making, for example, baked beans, the products in the operations or the process are identical. So that's an example of a what? Of operation costing. So under specific order costing, we're going to cover job costing, and under operation costing, we're going to cover process costing. Now let's start. Job costing. What is job costing? So for me to have a job, I'm supposed to have some sort of labor, I need to have materials, I need to have other direct costs. So job costing is defined as a method of recording the costs of a job rather than the what? The process. With job costing systems, what comes? The manager needs to keep track of each cost of each job rather than what? Which means what? We are maintaining data which is more relevant to the operations of the business. Due to the fact that certain projects such as construction, which I highlighted earlier, require different operations, accountants use this methodology to trace the expenses of each job in order to use this to what? To cost the what? To cost the project. Why would we need to cost this project? We might need to pay taxes. Our different stakeholders might also need to know if the project we are embarking on is what? Is profitable. From there, we have records or forms that you are supposed to keep when you're doing job costing. So what do we need? You need a job cost record. What does it do? It records uncompleted jobs and serves as a perpetual book inventory. So this accumulates product costs identifiable in batches or individually, and these are uncompleted jobs. The job cost records are for completed and uncompleted. So for all completed jobs, they are now processed further, forming my cost. But my uncompleted jobs now serve as my perpetual book inventory. That's where I start from, and I create a subsidiary ledger for work in process control account. Besides this job cost record, I also need a stores record, which is a book that I use to record inventories. That is the cost and the quantities of the material on hand. And I also need to create a ledger for the stores control account. What else do I need when I'm doing, what form of record do I also need when I'm doing job costing? I need a finished stock card, which on the finished stock card, I now list the cost and the quantities of all completed goods held for sale. That's where I now record these products. They are now ready for what? For sale. Otherwise, I also need a factory cost record. Why do I need it? I need to accumulate detailed manufacturing overheads that are incurred for each job. Besides that, I also need what? Stores requisitions, web tickets, and stock cards. Why do I need them? These are the source documents for charging costs to jobs. and overhead departments to aid in fixing responsibility and for control and for usage of material and labor. So on these stock sheets, on these tickets, on these clock cards, that's the source document that I use for charging costs. So on these stock cards, I'm supposed to have my labor, my materials. Why? So that when I'm assigning to each individual department or each individual center, I'm now fixing the responsibility for those costs for that certain that certain job. That is all on job costing. Now let's move on to process costing. So as you see, I move from process 1, then I get into process 2, from there I get into process 3, into process 4, and process 5. So my product is coming from one process into the next process. This method, like we highlighted, is applicable for products with a continuous or repetitive operations that come in sequence. So in sequence means if I'm supposed to move from point A to point B to point C. So why would I need a process costing? Process costing enables the ascertainment of cost of the product at each process and stage of manufacture. So at process A, I'm supposed to end up with a certain cost. Maybe since it's a sequence, I move it to process B, which I further move to process C. So now let's discuss some of the features of a process costing. The output consists of products which are homogeneous. Number 2, the product is carried in different stages of production in a continuous flow. Like I highlighted earlier, it's supposed to be a sequence. So each product is carried from one stage to the next in a continuous flow. Number 3, production takes place continuously except in cases where the plant or machinery are shut down. The output is uniform and all units are identical during each process. All units are the same, which meaning they are what? They are identical. So it will not be possible to what? To trace the identity of any particular lot of output into any lot of input, because they are what? They are similar. From there, the input number 4 will pass through 2 or more processes before it takes what? Before it takes the next process until a final product is what? Is attained. Giving me my what? My final product. What else? Number 5, the output of a process may also be sellable. In any case, to generate an additional what? Some profit, which is the output. For example, if I'm manufacturing something, if I can sell the output to generate some profit, that consists of a feature of a process costing system. Last but not least, the input of a process may be capable of being what? Acquired from outside sources. So normal and abnormal losses may arise in this process, just to what? To add on. Which now brings me to what? To the process costing terminology. I understand as we're discussing some of these features, we talked about different what? Terms. Now let's discuss. What is what? What is work in progress? According to your understanding, as the word suggests, it means what? Work, that is what? Products that are still being what? Manufactured, which are still in the production process. So as we are accumulating inventory, we can have inventory for work in progress. Remember, for inventory, we can have inventory for raw materials, we can have inventory for work in progress, and we can also have inventory for what? For finished goods. So in relation to work in progress, we can have inventory for work in progress. Now, how can we value inventory for work in progress inventory? We can use the weighted average method when we are valuing inventory. So what do we mean? Under this costing method, we combine the cost of all work that was done in the current period with the work done in the previous or the preceding period on goods carried forward on work in progress, which means I add my current work done plus my previous to obtain some sort of what? Of average. The underlying assumption under weighted average product is what? Is that goods are produced in different times are indistinguishable. The underlying assumption is that goods that are produced in different times are indistinguishable, which means they're what? We cannot be able to distinguish them. They are roughly or basically identical or the same. So that's where the concept of us adding this current plus the prior comes in, because we are saying the units are what? Are indistinguishable. We can also value work in progress using first in, first out, normally known as FIFO. So what will we be doing? The underlying assumption under FIFO is that work in progress at the beginning of the period should have now what? Moved to the next what? Production process. As the name suggests, the first work in progress that came into inventory should be the one which first exits into the next production process. So now, what do we do when we are now calculating using what? Using FIFO. We need to calculate equivalent units, which are determined using work done during this period only. Only current costs are considered in determining the cost per unit in the equivalent unit calculation. So costs carried forward from the previous period are assigned directly to completed what? To completed goods. Costs carried forward from the previous period are assigned directly to completed goods. So that's how we can value work in progress. We discussed what work in progress is and how we can value work in progress using weighted average method and first in, first out. Now let's discuss normal loss. What is a normal loss? As the name suggests, it is a cost that is expected in the normal production of a product. Say if you are in the process of manufacturing spirits, as you are decanting some of the spirit into the bottles, there's a certain rate that is expected of what? Of spirit vaporing. That's your normal loss. So as I said earlier, normal loss constitutes part of what? Normal production. Moving on, we have what we call abnormal losses. As I said earlier, I normally expect 2% to vapor. But now when I see that 10% is vapored, that's now an abnormal loss, which is what? An expense. An abnormal loss points out to operational inefficiencies. So it's rather a what? An expense. We also have an abnormal gain. So say using the same example, instead of me losing 2%, I only lose 1% due to vaporing. That's an abnormal gain. Because normally I would have lost 2%, but I've only lost 1%, which means I've gained an additional what? 1%. which is my abnormal gain. So an abnormal gain is a form of what? Of a profit or income. From there, we have scrap value. So sometimes an outcome of a loss can be sold at a lesser value. For example, in the production of screws, there may be a loss such as metal wastage. So those wastages can be sold at a what? At a much lesser fee. What we normally call a scrap fee. Maybe there's a market for these remaining metal wastages. We can sell them at a scrap fee. Last but not least, we talked about equivalent units, but now let's discuss further. An equivalent unit refers to conversion of part complete goods into finished goods, into wholly completed units. For example, when the production process ends at the end of the day, one unit can be 40% complete, another can be 60%, another can be what? 100%, which is one fully completed what? Unit. So these are some of the process costing terminology. So now let's discuss how do you approach a process costing question. Now, when you approach a process costing question, first of all, draw a T account for the process what? For the process account. There may be more than one process, but start with the first one. From there, you fill in the information given. So step 2, you calculate normal loss if there is any, and you enter it on the what? On the credit side of your process account. You calculate your abnormal what? Loss if there is any, or an abnormal what? Gain if there is any. You also calculate your scrap value and include it in the process what? Costing. From there, you calculate your equivalent units and cost per unit based on the units and these figures. You repeat the above if there is a second what? There is a second process. So this is how we approach a process costing question. You may be given 1 or 2 or 3 processes, but this is how we approach a what? A process costing question. So in summary, the nature of production, distinguishing job costing and process. Job costing, each job is manufactured against a specific requirement, but for process costing, it's a continuous flow without any reference to a specific job. When it comes to cost unit, each job is taken as a cost unit. Each job when it comes to job costing, but under process costing, each unit produced is taken as a cost unit. Cost accumulation, under job costing, costs are accumulated against each job. But under process costing, they are accumulated under each what? Under each process. For cost ascertainment, the cost of a job is calculated when the job is completed under job costing. But under process costing, we can calculate at the end of the accounting period. Why? Because we can be able to calculate what? Equivalent units. For cost control, job costing, as highlighted earlier, we list different forms and records that we use, which increases paperwork and more managerial attention. But for process costing, since the product is homogeneous, cost accounting and cost control is comparatively easy. Last but not least, under job costing, work in progress may or may not exist. Remember, cost accumulation is per job. So likely after each job is completed, you may or may not have any work in progress. But under process costing, at the end of each accounting period, work in progress will always exist since it's a continuous flow. So from this one, next step, let's go to part 2 of the inventory costing lecture. So thank you for listening. Looking forward to seeing you in part 2 of inventory costing.